we talked about this possible future outcome. So we're going all the way back to last week, and you'll see that on the drawing, this is a live room drawing. The guys that were in the room at that point in time will be able to verify that this is an actual conversation we had in the classroom about this particular trade setup. And this is a possible future. Now, in the world of trading, in the world of physics, in the world of asteroid detection, which is one of the things we've obviously been hearing a lot about in the news recently, with that asteroid that was getting a 1% chance, a 2% chance, a 3% chance, a 3.5% chance of hitting Earth. And then the trajectory gets more knowledgeable. You get more knowledge, more informed about the trajectory, and it goes 3.5 to 2.5 to 1.5 to 1 to 0.5 to 0.00000004. And all of a sudden it's drifted out of the probabilities. Well, trading is very similar to that. This is a possible future, right? That's why we call it a possible future, not a probable future at this stage. We're potentially hours and hours and hours away from a probable future. But like all possible futures, they develop through a series of twists and turns. The probability, like an asteroid hitting Earth, changes every time you observe the situation. Every time you observe the narrative, the probability changes. Either the probability gets higher or the probability gets lower. Either the possible future turns into a very probable future, or the possible future drifts off into oblivion, into nothingness, into such a low probability event that we no longer register it as a realistic possibility. So this is an incredibly important concept to understand in real world institutional trading. So this trade actually got better. In other words, this is like that asteroid that hit 3.5% probable. It was only possible at that stage. 3.5%, that then hit 4%, that then hit 4.5%, that maybe hit 10%, that then maybe hit 20%, 30%, 50%. And at 50% chance of hitting Earth, they'd be starting to work on lasers, nuclear weapons. They'd be starting to work on rockets being able to hit it, deflect it. They would actually start putting into play some real, pretty heavy-hitting opportunities, right? So because it became a probable future, a high probability, probable future. This trade did exactly that. It actually went from a possible future with a possibility of maybe 2, 3, 4, 5% happening, and it went up and up and up and up all the way to 99% certain that it was going to happen as a probable future. So we adjust the trajectory in every subsequent observation. We adjust the probability on every subsequent observation. And interestingly enough, we did adjust exactly that. We did exactly that. So this was on the 29th of May. And then you'll notice that on the 30th of May, at 3:38, we adjusted our narrative. And we told you very clearly that oil is now $2,000 too cheap at the moment. And we told you that because it's Friday, the smart money will probably try and get the day trader longs to be busted as often as possible into the close, because a day trader that's long will be a seller at the close, which means that we will get our long position as much as we want. Day traders obviously not looking to hold long exposures over the weekend. So when you then look at what we forecast was going to happen, which was this, you'll see the boxes drawn in where we said it was going to draw down into this area here, and then it was going to rally from there, and we said it was $2,000 higher from Friday, and Friday's price was $61. So we suggested at that stage that oil was going to trade $63, right? 63 was the forecast. And if you look at what happened, we traded into that exact box in here. It extended, it developed, it ran some stops at 60 evens, and then you can see what happened since then. It traded 63 plus a bit of change. And as it trades a bit of change at the top edge, we've just called our first gamma scalp, which we said we're not going to be doing this morning in London. I says we're not going to be scalping this, we're not going to be selling this, I'm going to let this ride as long as possible. I finally tweeted out, of course, that we were now gamma scalping the 75 level, And you can see that that little cheeky gamma scalp off 75s, it doesn't even have any real sell side value, but I saw enough to take at least a shot at it. And the 75 is now dropped down to, as you can see, 60, 55s now. And, and a pretty reasonable little $400 profit on a trade there. $400 profit per contract on a trade there. It's all right. We'll take it any day of the week. Oh no, sorry, it's oil. My mistake. I was talking about NASDAQ. But you get the basic idea. A reasonable little $200 profit per contract, and that's $1,000. $1,000 scalp. Again, we'll take that any day of the week. It's a very, very good trade. But you can see in the background, look at this. Look at this reg line against the swap dealers. Look how strong that is. So in other words, that scenario got better, not worse. If you look at the reg line in terms of what it's painting, you'll probably be able to recognize that the reg line is painting what turned out to be a sensational change to the market dynamics of oil, and yet we got a bottom line price. Mere normal traders don't think that's possible. We know it's very possible. In fact, it's not possible, it's probable that when the value is as good as this, they will purposely go lower to get rid of anybody that's trying to hold on to any longs, to try and get them busted, to try and get them upside down, to try and get them to throw away their positions so that we can buy even more at 25s and then 60 evens. And for a buyer into this area, the buy value in this was enormous. And from VWAP, it was about $500 between VWAP and the bottom edge here, $600. It was just the perfect trade. It was just the perfect trade, guys. We're now trading 40 on that sell on oil, by the way, guys. 35 tick sell side profit, guys. $1,500 per contract. $1,500, sorry, on a 5 lot. $300 per contract since that tweet went out. And it gave you, as I said, it gave you 2 minutes warning to get the gamma scalp play into your books if you liked it enough. I liked it enough. I took it. I showed you the screenshot. And that trade's just untraded 40 for 35 ticks now. 35 ticks, guys. That's beautiful, isn't it? So that, my friend, is what you call a gamma scalp. Look at that sell, guys. Look at that sell. Is that not a little bit spectacular? 75 sell side, trading 40s, and you had 3 minutes to get into it. If you took advantage of it, you've done pretty good. Just to remind you, we did have that in advance. You'll see that the gamma scalper started hitting it at 75s. That was at 1:31 p.m. London. 1:31 p.m. London. You will notice that the top edge did not come in until 1:33 right there. So there's 1:33 right there. There's the top edge starting to show up right there. And that's at 1:33. So the tweet came in here on this down candle. So you can already recognize the sellers in place. You can now join in. And you can now take advantage of what turned out to be a 35 tick sell side winning swing, $350 profit per contract. And a very easy trade level, because we know that 75 is going to be a gamma scalp level, right? Because of the volume that we have at 6350s, of course, we know that 75 is going to be the gamma scalp level. So we're going to be aiming for that sell side value at 75s. And it doesn't get much better than that, does it? Live room call. So I like it. Not a lot, but a little bit. It'll do. selling that 90 level on your NASDAQ, you're also selling the 59 handle on the S&P, which is pretty big, right? It's a pretty big meaty level, 59 handle. And again, this concept of relative value probably not lost on anybody, with an ounce of common sense about what we should be doing. Remember, we're selling the red line if we're trading against the YM storyline. So the guys mentioned this 90 level before, which is also the 900 on the S&P. And you can see that in terms of relative value, there's a lot of sell-side relative value here, isn't there? Yeah, and a lot of people might not see that because they'll see how bullish this is in this short-term punch here. You'll see a very, very, very bullish pop here. And when they look at that bullish pop, they'll say we should be basically long in this area here, trying to get into that little phase there for the pop. But obviously, when you see that very, very bullish phase, there is a macro storyline that's evolving, which if I then take it off a 1 minute chart, it becomes dead obvious what the macro is. You'll then recognize just how macro divergent this storyline is here. You'll see that that is a very strong sell side divergent top edge up here. So 59 handle longs getting trapped at those prices, very easy to see the lean against those guys there, and a very nice sell away from that level, plus the 90 level on the NASDAQ, which was mentioned this morning. I think Johnny mentioned it. And 59 evens trading down to 95s, 94s, doing a good bit of business there if anybody's on it with Reeve. Congratulations, nice trade.